GMGM, thanks for tuning in. My name is Josh Gordon. This is an Unstoppable Domains partner interview. I'm here with Martin, CEO and co-founder of Morpher. Martin, how are you doing today?
I'm great. Thanks for having me.
You're welcome. I'm always excited to talk to founders and builders in the Web3 space and really just want to learn more about what you're working on and bringing to the table. It's an exciting time right now in Web3 with people building solutions for, tons of problems and challenges, and the innovations I'm seeing are just coming like faster and faster. So can you give us a background on yourself and also like how you got into crypto originally, and then we'll dive into Morpher.
Yeah, sure. My name is Martin. I'm the co-founder of Morpher, as you've mentioned. My background is mathematics and quantitative finance. I've studied technical mathematics here in Austria and have joined a quantitative hedge fund after my graduation. I've developed trading algorithms, especially for the futures markets, but also for the equity markets that trade these markets autonomously based on mathematical formulas. Later, I've moved to Switzerland, to Zurich, where I've built up and led a quantitative research firm from scratch. Zurich has a great technical school, ETH Zurich, and we were recruiting a lot of great quants from that school. And then during that time at Idealab, I realized that the quant industry is one of the highest paying industries, but also one of the most inefficient ones because it wastes a lot of its best talent. There are many people who apply to become quants, and only very few are taken into the industry and actually work as a quant then as their day job. And that's a clear inefficiency. And I wanted to solve that inefficiency by creating a company that would operate as decentralized quantitative hedge fund. And I did that. I moved to Silicon Valley to do that. That was my first startup. We built free software and market data that we made available to thousands of quants worldwide for them to write trading algorithms. And the best trading algorithms would get funded by capital from institutional investors. So trading and investing is something that has kept me busy pretty much since high school. I've started trading US stocks when I was 16 and back in high school. And I've seen the markets through many perspectives, from being a small retail trader up to managing a small quantitative hedge fund in the US. And regardless of where you are in the food chain, trading is always burdensome, it is unfair, and it is costly. You have to go through a lot of middlemen, you don't get the level of access to the markets that you want to have. It costs a lot of fees to trade the markets, many markets are not liquid enough. So regardless of where you are, trading is a suboptimal experience. And with Morpher, and that's the startup I'm working on right now, I've currently set out to solve these inefficiencies by eliminating the middleman from the equation, like brokers, banks, exchanges, and replacing them with a protocol, with a smart contract on the Ethereum blockchain. And we even go one step further than that. We do not just replace the middleman, but we also replace the counterparty of the trade with a smart contract. So we are a trading platform with Morpher. We are, if you will, the next version of the challenger broker. We empower our users with direct access to trading stocks, commodities, cryptocurrencies, everything pretty much via virtual futures on Ethereum.
Yeah. Okay, cool. Lot to dive in there. Now, I'm coming from a very different background from you, and I imagine almost everyone listening, is not a quantitative trader, right? So let's break some of this down. Why is eliminating the middleman important when building a trading platform in this decentralized way?
Yeah, trading without a middleman is effectively trading how it should be. So in an ideal world, a trader would have access to all markets. The markets would be liquid 24/7. I could trade them around the clock. I would not be dependent on a third party granting me access to those markets or charging me fees for it. I could short every market, so not just to speculate on rising prices, but also on falling prices. And I could trade every market with leverage and perfect liquidity. So that's what I want from trading, essentially. And that's exactly what Morpher makes possible. So by taking out the middleman and replacing them with a smart contract protocol, we achieve all the advantages that traders are longing for.
Yeah, interesting. So when we're trading traditional US stocks, I mean, I'm not sure, are you familiar with apps like Robinhood, for example? How does the
Mhm.
middleman come into play in those apps that maybe we're not aware of? What's
Yeah,
going on behind the scenes? I'm curious because maybe as a standard trader, I don't even realize there's a middleman in there that's
right.
creating maybe less advantageous in a less advantageous environment for me as a retail
Mhm.
trader.
Yeah. So there are actually a lot of middlemen involved into trading, even with challenger broker apps like Robinhood. Robinhood itself is a broker, or at least an introducing broker. They are taking their customers' order flow and selling it to another institutional trader, a counterparty, so yet another counterparty, who then executes these trades on an exchange, so yet another counterparty. So even if we're optimistic here, there are at least three parties involved in your trading order that's placed in an app like this. And at the end of the day, all these middlemen charge you fees, even though it might not show up as a commission in their fee model. But at the end of the day, these middlemen want to make money and they charge fees. And you get a worse execution price than you maybe would have gotten otherwise if your order flow would not have been sold. So essentially, it's not free, unfortunately, and it does involve middlemen, and it makes everything, highly inefficient. And in Morpher's case, we replace these middlemen, we replace the broker, but not just the broker, also the exchange and the counterparty of a trade with a smart contract protocol. So you just specify which market you want to trade, you allocate a number of token on that market, and you are rewarded proportionally in R token if you're right, or you lose R token proportionally if you're wrong. So
Yeah,
we replace also the party you're trading with, and that's really a paradigm shift.
gotcha. Okay. Now I think I'm slowly starting to understand here. So when you are trading on Morpher, can you dive into a little bit more on why this smart contract is beneficial? I mean, it sounds like this smart contract is really helping create a more fair environment. But what
Mhm.
is like why do we need a smart contract for trading in this instance?
Well, blockchain excels at replacing the middleman with software, and that's exactly what our smart contract also does. So, the Morpher protocol, our set of smart contracts, is built to empower people with virtual or artificial exposure to any underlying market. In practice, here's how it works. So, if you have 100 of the native tokens of our smart contract, so our smart contract comes with its own cryptocurrency. If you have 100 Morpher token and you bet them, say, on the price of Apple, and Apple goes up 10%, you receive 110 Morpher token. If Apple goes down 10%, you receive 90 Morpher token. And unlike on the traditional exchanges or via traditional brokers, you don't need to find someone who is willing to sell you Apple at that point in time when you want to make the trade. You're simply instructing a smart contract to accept your token bet, your token denominated bet on Apple. So that works without a counterparty. That works even if you're the only person in the world wanting to trade that particular stock at that point in time. So we're replacing everything, and this is only possible due to a smart contract that has the power to burn or issue currency, because that is how we settle the trade.
Yeah.
So effectively, if your Apple bet has been successful, the smart contract issues new token to you. If your bet has been unsuccessful, the smart contract burns some of your token. And this
Yeah.
is simply not possible without a smart contract.
So, the token side of things is something that I'm still trying to understand better. Now, you've created a new token for the Morpher decentralized exchange, right? That you're
Mhm.
getting, and that runs on the Ethereum blockchain.
Yeah, that's correct. So it's an ERC20 token that lives primarily on our Plasma sidechain, but yes, it's also on Ethereum. Yeah, so
Yeah.
it's pegged to Ethereum. Mhm.
So let's say I come to Morpher. I want to put a bet on Apple going up. I have 100 MPH. That's your token, right? And
Mhm.
do I have to have 100 MPH to place a trade? Like, do you have to have MPH in your balance to place a trade? Or I think I'm just not fully understanding here
Mhm.
how you actually receive MPH. Like, who's it coming from? Once you have it, how do you turn that back into maybe ETH or USDC?
Yeah. Through an exchange. So MPH is a cryptocurrency. The price of it is free floating and it's trading on cryptocurrency exchanges. And if you want to use our infinite liquidity trading platform, that has zero fees, by the way, then you just buy Morpher token. So as many Morpher token as you want to buy. So depending on the account balance that you want to trade with. And then you invest your Morpher token, and within the Morpher system, trading is completely free and comes with infinite liquidity, and you can leverage every trade up to a factor of 10 in both directions, long and short. And when you want to monetize your token again, then you would simply withdraw from your account and sell the token on a crypto exchange.
Gotcha. Okay. So it's this, you're able to buy the token and then place the trades. And I guess you have, or not you specifically, but Morpher has a balance of tokens too, right? That you're able to pay these trades out?
Yes, correct. That's one aspect. The other aspect is that the overall token supply in our economy is not constant, but it changes with the collective trading success. So if your prediction about a market is correct, new token are minted for you. And if your prediction is incorrect, token are burned. So the token supply, the overall supply is not constant, but it changes with the collective investment success.
Interesting. Cool. So is there a cap on that supply then? Because if, let's say, everyone has successful trades, for a month straight and no bad trades, does that mean the supply can go up?
That means the supply can go up. So there is no hard cap in that sense. We do have a couple of factors here working in our favor, though. So the first one is that the expectations of the traders about the markets are diverse. So some people are long a market, other people are short a market. That means that there is never a perfect alignment across our traders into trading just one particular asset into one direction. So that's one thing. Yeah. The second thing is that despite trading on the platform being free, essentially, there still does apply a fee, if you will, for leveraging your position. And that fee is not something that we charge or collect, but these are simply tokens that are burned. So for borrowing, if you have 100 Morpher token and you borrow virtually 100 Morpher token to leverage your position with a factor of 2, an interest rate of 11% per year would apply. So in order to do that, you pay 11 MPH per year. And these MPH are burned and taken out of the supply. So with that effect, we can essentially indirectly, just like a central bank, via the control of the interest rate, control the issuance rate of our currency and keep it stable. And the third effect that's to be considered here is if everyone is winning on the platform, it is correct that we would increase the token supply and your profit would then be reduced to your overperformance of the performance of the average trader on the platform. So if everyone makes 5%, but you're making 10%, you would still be profitable here on the platform because you're getting a bigger piece of the same sized pie if everything else stays equal. And that again is the same effect that you have on traditional exchanges as well, where you also have to beat the inflation rate, only that it's in our case the average return of everyone else, but you have to beat the inflation rate in order to have a profit, a monetary profit. And in times like this, where the inflation rate is 7%, that's actually not very easily done for many.
Yeah, no, that makes sense. And you mentioned the ability to short through Morpher too. What do you see people doing more of on the platform? Is it shorting or is it long positions?
It's a combination. So we see that the majority of our users and traders is effectively long, and most of them prefer crypto, virtual swaps or virtual futures as we call it, so virtual positions on crypto over stocks. But we have found that our users primarily come for the stocks and then stay for the crypto. Again, with the bulk of them trading long positions.
Yeah. Another question I've got for you, and this was when I was on your website and doing some reading. Now, when people are placing bets or on if certain stocks are going to go up or down or certain cryptos, now you mentioned synthetic assets, right? And people aren't actually buying shares of the stocks that they're placing positions on, and it's because you're using the Morpher token, right? Can you just explain the synthetic asset a little more? Because I think that's going to be something new for a lot of retail traders.
Yeah. It's pretty straightforward actually. So we use the Morpher token as the settlement currency, and the smart contract operates like a prediction market essentially. So you would just specify when you want to open a trade or a virtual position, a synthetic asset, you just specify which asset you want to bet on and in which direction. And the smart contract records that and burns the token that are involved into your bet. So if you're betting 100 Morpher token, they are taken out of the circulating supply, and your virtual swap, your virtual future position is recorded on the blockchain in the smart contract. And that position is now recorded as you have bet 100 Morpher token on the Apple stock at that and this and that price. And then when you want to settle your trade, when you want to sell some of your virtual position, you simply call the smart contract again, and the smart contract computes the price difference between your entry into the market and the price now, and then computes how many token this equates to. And this is the balance that is then minted for you to close or to settle the position. So it's pretty straightforward, with the Morpher token functioning as the universal settlement currency of all synthetic assets that we have.
Interesting. So where do you see this going from here? Like, are we going to be able to bet on just stocks and cryptos, or is there, bet's the wrong word, it's invest and place positions on, stocks and cryptos, or do these synthetic assets stretch out to other areas too, and stocks is just the beginning?
Yeah. It's exactly that. So stocks is just the beginning. We have started with traditional markets to show the performance of our protocol and what it is able to do. And we're now tapping into more exotic markets or instruments. We have the big advantage, since we don't require an underlying market that is tradable. We can effectively turn anything that comes with a data feed into a market. So we have plans to support real estate prices, real estate in every major city on the planet. There are indices that reflect the prices in these cities, and then people will be able to hedge against price increases of real estate in their hometown via that, for example. We can turn economic data, general economic data, can turn that into a market. We could take liquid markets that are not tradable on the futures exchanges, like for example onions. There are no onion futures. We could turn that into a perfectly liquid market on Morpher. And right now we have a small Skunkworks project going on that will make the sanctioned and barred Russian stocks liquid again via a smart contract platform. So we will just enable trading of these sanctioned assets that are now out of reach of Western investors, and Russian investors are, by the way, barred from shorting Russian stocks at this point. We will just create synthetic and virtual markets of Russian stocks again to make them tradable and available to everyone, and we will donate 100% of the proceeds to Ukrainian refugees.
Interesting. Yeah, very cool that you can turn all these different asset classes into markets. Now, a couple more questions I have is, you mentioned the profits being donated. So where are the fees coming from in the platform if like trading is free?
Yeah, so in the platform, the fees come from something like a structural inflation, and that makes Morpher very similar to other protocols like Ethereum or Bitcoin, where also through Coinbase transactions, with every block that's added to the blockchain, new Bitcoin or Ether is created and issued to the miners. So this is essentially some form of structural inflation. And in our case, it's exactly the same. The Morpher protocol simply issues 0.015% new token every day to the company, which compounds to roughly 5.6% of newly issued Morpher token per year to the company, which we then can sell into the market. It's hard-coded in a protocol that it can never be more than that. It can only become less than that.
Gotcha. Yeah, makes sense. Some very innovative trading things going on here. And who's your ideal trader? Is it someone who really comes from that quant background? Are you going to be going after retail traders? I mean, the things that you're describing here is there's some complex innovation that goes to building this kind of
Yeah.
decentralized exchange. But do you see the average trader being a more for user, or is it really your experienced trader who wants to get access to non-traditional markets?
Our goal is to simplify trading that much that the average user can really use the platform. In fact, our goal is to turn Morpher into the largest or biggest challenger broker globally. We are the only platform that can offer the disenfranchised 80% of the global population that currently has no way to access Tesla stock ever. We can empower these people with access to Western financial markets. And I'm
And
thinking of people in Latin America or Africa or Asia.
yeah. And can I jump in right there is why do
Hmm.
those people not have access? Because this is something that I actually may not be as familiar with just being a US citizen, right? So what
Yeah.
blockers do they face that are overcome that they can overcome by using an exchange like this? Is it you I maybe an answer is you just straight up need a US bank account to invest in US stocks, or are there
Yeah.
regulations like that? What is it?
Yeah, correct. It's a mix, and it depends very much on the country we're talking about. But it's a mix of all this. So it's regulations on the one side. It's simply not being accepted as a customer by a U.S. broker on the other side. So I, for example, here in Austria, I have a hard time to open a Robinhood account.
Mm,
It's effectively not possible. Yeah? So brokers operate in certain jurisdictions only. Of course, there are some brokers that operate internationally, but they usually require their users to have a certain minimum account balance of, say, for example, $10,000. This is an example that I've heard from Brazil being the threshold for someone to open a broker relation with a US broker there. This is very different from country to country, but our goal is really to empower anyone, regardless of their country of residence or their financial wealth, with access to the markets. Because another practical barrier to entry is even if you get the access, you still have to buy one share of whatever it is that you want to buy because there are usually no fractional shares for
yeah.
you available, meaning that you need to have at least a certain minimum of a couple of $100 usually to participate in the market in the first place. And that's all not true with Morpher. With Morpher, you get access to all the markets with one single app, and it doesn't matter if you trade $5 or $5 million.
Yeah. All you need is the ability to get crypto. So you need some kind of on ramp
Yeah.
into the crypto world. But once you
Hmm.
have that, you're able to participate.
Yeah, correct.
Very cool. No, I love it. And I appreciate you explaining some of the barriers that people around the world might face to get access to markets. And then when you have those barriers in place, that's where people with access can continue to grow their wealth and, you know, and grow their financial positions and gain access to assets. Whereas people without that, sometimes you're stuck from ever being able to
Yeah.
participate in like wealth building. So
Yeah.
very empowering features you're working on here. And can you tell me maybe a little bit more how you're working with Unstoppable Domains? It sounds like from our conversation pre-recording, you've gotten Morpher has their own NFT domains and plans on using them in the future.
Yeah, so we have, it's correct. So we believe that unstoppable markets require unstoppable domains going forward. And that's why we are super excited about integrating with you guys. Um, we're currently still in the process of integrating with it. But bottom line is, we really want to build a decentralized environment, a completely decentralized smart contract protocol. And for that, the best endpoint for the user is, of course, a domain that's not stoppable and will allow them to trade unstoppable markets. Yeah, so that's the goal. We want to completely decentralize all of our services. That is not only the trading platform, but also the data oracle, which we have also written ourselves and which we will share with the crypto community and open it up and decentralize it. That's actually something we're working on right now. And yeah, we believe that the more decentralized all these services are, the better it is at the end of the day.
Very cool. Yeah, I'm excited to see it come out. I think NFT domain names are particularly useful for exchanges when you are
Mhm.
uh, logging in with an NFT domain versus maybe like an email. I think that an NFT domain also offers some interesting uses for login versus just a wallet. The ability to give permission information to an exchange in exchange for rewards opens up a lot of interesting user experiences. So excited to see those integrations happen further with
Mhm.
you all. Well, Martin,
Yeah,
is
exactly.
there anything else that you want to share with us today? This has been really informative, and I think gives all of our listeners and members a good insight into your application. But I just wanted to make sure if there's anything else we need to know, please share.
Yeah, no, thanks a lot. I think we've covered the main points. Yeah, we are super excited about our future collaboration. And yeah, thank you for having me.
Awesome. Well, everybody, please be sure to check out the Morpher exchange. Martin, can you share with us where they can find Morpher and you on Twitter or online? I
Yeah,
see. And go ahead.
yeah, sure. So the website is morpher.com with PH, and our Twitter handle is morpher_IO.
Sweet. Morpher_IO. Give them a follow on Twitter so you can stay up to date with all the stuff that's going on with the exchange that they're building. So thanks so much, Martin. I'm going to be sure to check out Morpher more myself and look forward to trading. So appreciate it.
Awesome.
Have a good day. And for everyone listening, we'll see you in the metaverse. Peace out.
Yeah. Bye. Thank you.